Hello, my friends. Today is July 12th, and this is Markets Weekly. Now, this past week, looking at the broad equity indexes, it looked kind of boring, actually. I got the sense that they looked like they were somewhat pinned. However, there were a lot of price movements in other markets, and of course, a lot of news flow. So today, let's talk about three things. First off, we have to talk about the return of tariffs because they are back in a big way. Secondly, what caught my eye the past week was the breakout in silver. So let's talk about how silver is the original meme coin. And lastly, it looks like Trump allies are having a new attack line on Jerome Powell, trying to force him to resign. So let's see what's happening over there. All right, starting with tariffs. So last week, we were speculating as to what the president would focus on now. Over the past 6 months, and it's only been 6 months, a lot has happened. Now, the president passed his signature big, beautiful bill. He's also stopped war between India and Pakistan, caused a temporary truce in the Middle East, and of course, upended global trade post-Liberation Day. So, heading to this week early on, he had an announcement that the July 9th deadline for tariffs would be pushed to August 1st. So, on the surface, it looked like he was again tacoing. But what actually happened in the following days was pretty surprising. Afterwards, the president sent out a series of letters to many countries telling them that, hey, starting on August 1st, your new tariff rate will be this. Now, the new tariff rates were anything but tacoing. When you look at a chart of Liberation Day tariffs and compare them to the new letters the countries are receiving, it looks like for many countries, their tariff rates are going to go back to Liberation Day levels, sometimes a little bit higher, sometimes a little bit lower. So it seems like a tremendous escalation in tariff rates for many countries. And the markets didn't really react to this at all. Again, it's hard to see what drives prices. It could be underlying pinning. It could be that many people are just very complacent, thinking that the president is just going to U-turn on this because, of course, he has done so many times in the past. This time around, the tariffs are a bit more than they did in April 1st, though. They're more in a couple ways. First off, we have new countries receiving letters that weren't touched on April 1st, and also we have new sectors receiving tariffs. Looking at the new countries, what stood out the past week was, of course, Brazil and Canada receiving tariffs. Brazil was not included in Liberation Day, and for good reason. The U.S. runs a trade surplus with Brazil. So from the White House's perspective, we are winning in trade there. But the president's logic specifically notes that Brazil has been treating his friend, former President Bolsonaro very poorly, and so he's tariffing them. So it's basically a tool of political change or political coercion, so forth. So it's a new use of the tariff tool. Probably won't stand up in court. I don't know if it's going to be challenged, but it does expand the horizons that the president is willing to use with his tariff power. The tariff on Brazil is 50%, so it's sizable. Although I don't know how much they export to us. It looks like estimates are that it's going to have a 1% GDP impact on Brazil. Now, the other new country that received a letter was Canada. President saying the Canadians are going to be tariffed at 35%. But a lot of the Canadian trade is covered by the USMCA agreement, so in practice, it doesn't look like it's going to be very consequential. Now, Canada was not included in the original Liberation Day trade, so it does also show an opening of the new front. What's notably absent over the past week was really big trading partners like the European Union not receiving a letter. President did mention that he was going to send a letter in a couple of days, but it seems like they're still negotiating, and so a letter could happen anytime depending on how that goes. Another new set of tariffs the past week was sector-wide tariffs on copper. So we have tariffs on steel and aluminum. Those were reliant upon studies done during the first Trump term. It looks like Trump has a new study now showing that copper is commodity important for national security, and so he's levying a 50% tariff on copper. Now, these rationales are important because the rationales show how vulnerable Trump is on legal challenges. The IEEPA emergency tariffs were challenged, but these sector-wide tariffs, they are on a more solid footing. Now, copper traders have been anticipating copper tariffs for some time, so they've been preparing for this. But by all accounts, many people were surprised by how large the copper tariffs were, and they sent U.S. traded copper prices vertical. basically, once they were announced. Looking at COMEX prices against London Metal Exchange prices, there's a wide premium in U.S. traded copper, as everyone anticipates that after the tariff, prices of copper in the U.S. are going to be a lot higher than the rest of the world, obviously, right? And what seems to be happening is that over the past few months, copper has been pouring all over the world into the U.S. trying to get ahead of the tariffs. And this has been a very, very profitable trade for many metals traders, because as they source copper from, say, China or whatever the world and put them in the U.S., after the tariffs came into effect, that copper is just going to be worth more compared to the rest of the world, since in order for copper to get into the U.S., they now have to pay that 50% tariff. So the U.S. is reportedly awash in copper right now, and so the U.S. companies are not going to be in need of copper for some time. The rest of the world maybe possibly more scarcity there. Now, it's kind of curious for Trump to do this as a rationale, since obviously we're not going to be able to just dig a new copper mine suddenly, right? After the president could not have a third term, and then we could have a new president who takes off these tariffs. So any investment in a copper mine in the U.S., which, to be fair, takes years and years to build out, would be premature. But I was listening to some smart people discuss this, and one possibility could be that the U.S., although is not doesn't have big copper mines, doesn't really produce primary copper, actually exports a lot of scrap copper to the rest of the world. So if you have copper tariffs, what could happen is that the U.S. could develop capacity within itself to use that scrap copper instead of just exporting to the world, and that would help in copper self-sufficiency, developing capacity to manage, refine scrap copper is a lot easier than digging a brand new copper mine and produce primary copper concentrate. So that could be a rationale there. So looking at the market reaction, so again, very surprised that the equity market seemingly doesn't care, but of course there could be other things happening there, some sort of pinning. But other markets did react to this, and it reacted in an interesting way. Now, according to standard economic theory, when we put on tariffs like this, the dollar is supposed to strengthen. And that's how it reacted before Liberation Day. Post-Liberation Day, you kind of had this change in regime, whereas tariffs became dollar negative, and people were seemingly kind of worried about U.S. exposure. This time around, though, and this is an encouraging note, is that the market went back to a much more traditional playbook. The big tariffs caused the dollar to strengthen, and it also caused the bond market to sell off. So interest rates higher, likely in anticipation of but potentially higher inflation, which is possible. But again, as we've discussed before, doesn't seem to have happened. To that point, though, I think it's worth talking about the extra tariffs that the U.S. has put on Japan, close U.S. trading ally, which discussions haven't been going that well. Now, there's some interesting data showing that auto export prices from Japan to the U.S. year over year actually declined by 20%. Now, recall, we also have auto sector-wide tariffs globally of about 25%. So what that's telling you is that the Japanese automakers, in order to remain competitive into the U.S., they are lowering their prices by about 20%, such that after the tariffs, the prices that U.S. consumers face are not impacted by the tariff. So this is an example where the cost of the tariff is actually borne by the foreign exporter. In other industries, it will be different. There will be industries where the U.S. importer will kind of have to stomach the cost with lower margins, and there will be some products where the U.S. consumer will have to pay more. This is a very complicated puzzle. It's going to depend on very different dynamics. But yes, sometimes the tariffs are borne by the exporter, and in this case, it's a major item. It's borne by Japanese auto exporters. And I think one of the big contentions in the Japanese-U.S. trade negotiations is the sector-wide autos. Now, there's some reporting today suggesting that the U.S. kind of wants these, East Asian countries to stand up and say something that they will, not be happy if China invades Taiwan or something like that. But in any case, the U.S. continues, as is shown in the case of Brazil, to use tariffs in a very broad broad sense, accomplishing many political, geopolitical goals, and not just trade goals. So it looks like for now, Tariff Man is back. And no, unless the equity markets or the markets have a stronger reaction, it's hard to see a reason why he would change his mind. In April, it was very clear he had to change his mind because too many people were feeling yippee, as he would say. But now, what's the reason to climb down? So we'll see what happens in the coming weeks. Now, one other interesting thing happened the past week was, of course, a breakout, seemingly related to trade, was the breakout in silver prices, which is what we want to talk to next. Now, silver prices surged on Friday. It looks like surged about 4%, and it looks like it's properly breaking out. Now, silver, I find it to be personally interesting because I think of it as the original meme coin when it comes to things like, dollar debasement and hyperinflation and stuff like that. Now, all this talk, we hear this over and over again. The people who believe in stuff like that have largely migrated to things like crypto, but it has a long history. Now, if you look at the price of silver, periodically it just surges. It just surges upwards. It's hit a top in $50 in the 1980s, $50 again in 2010s, and right now it's not close to $50. But if you look back to episodes in the 1980s, you can see you had this huge surge, crypto-like surge, in the price of silver. And back then that was because the Hunt brothers, which were two billionaire brothers, sought to corner the price of silver. So back then they were saying that, the dollar is, doing poorly. We're going to have huge inflation. Everything's bad. We got to buy hard assets. And in their defense, back then in the 1980s, when they were buying this, inflation was high. It was like 10% year over year. So having fears of huge inflation, currency debasement, totally legitimate. And so what they were trying to do was they were trying to buy up all the silver in the world, basically cornering the market. And they were doing this pretty successfully, actually. You can see that silver surged from a few dollars to as high as $50. The Hunt brothers were buying silver, asking for physical delivery, and also borrowing a whole bunch of money and buying even more on leverage. And that was really kind of squeezing the market higher and higher, so much higher that the authorities became worried. You had changes in rules by the CFTC. You had some moral suasion by the Federal Reserve trying to discourage banks to provide margin to the Hunt brothers. And at the end of the day, that was successful, right? So when they're highly leveraged and prices go down a little bit and you have trouble renewing your margin loans or getting additional financing, you have to sell to cover your margin. And when you sell, prices go down more, and that means you have maybe more margin calls. And eventually, this whole thing imploded rather suddenly, and silver was back to where it was. So that happened, huge squeeze, crypto-like. Now, fast forward to 2010s, something similar happened again. That again was the same people, well, not the same people, the same kind of thinking. That was post 2008, so it was a time when the Fed was doing a lot of QE. People were looking at the Fed's balance sheet and it's like, we're doing hyperinflation, Fed is printing a lot of money, dollar's going to go to zero and so forth. But at that time, it was a lot less defensible. Inflation was very low. I think we were 2%, and the Fed was worried about deflation at the time. Fed was doing a lot of quantitative easing, and those who had a very poor understanding of the financial system were pointing at that and suggesting imminent hyperinflation, and they, of course, were totally wrong. But in any case, it did not stop them from buying silver. So if you look at the price of silver back then, up. I remember because I was in that trade back then, and it was went up and up and up and up, and everyone was wondering how high can it go. You even had articles in big newspaper publications talking about people who kind of didn't know anything about macro, just in their heart believed that silver was going to go to the moon. And silver did rise all the way up to $50, about where it was in the 1980s, and then one Sunday evening, I remember because I saw that, COMEX opened and silver just kind of went down in a big way, and that was the end of it. So these things happen in silver. It's a very volatile metal, and before there was things like crypto, it captured the imagination of retail speculators who were who believed that there was some problem with, inflation or hyperinflation and something like that.
Did you hear about the Fed?
No, what about the Fed?
They announced another round of the quantitative easing.
What does that mean?
It means they are going to make large asset purchases via PAMO.
What does that mean?
It means they are going to expand their balance sheet and buy treasuries.
What does that mean?
It means they are going to print a ton of money.
So bringing that to today, it looks like silver is breaking out again. Gold has already reached all-time highs a few weeks ago, and now silver is quite far from its all-time highs, and it's surging higher. And historically, as we've seen in these two past episodes, when it goes higher, oftentimes it gathers momentum. A lot of people pour in, and it could potentially go higher. Now, the problem this time around, of course, you have ongoing things like deficit concerns. You got ongoing things like Fed independence, what we'll talk about shortly. But you also have a lot of other assets that are absorbing the flows of people who see the world in that way. Specifically, crypto. We saw Bitcoin make all-time highs the past week. So, not really sure how high this will go, but it's something that's happened in the past. So that's something that I think bears looking at. Keep in mind, of course, that silver is also in part an industrial metal, so it is related to things like equities and the economic cycles and so forth. So I thought that was something interesting the past week. And the last thing I want to talk about this week, of course, is the ongoing assault the president has on the Federal Reserve. As we all know, President Trump is not a fan of Jerome Powell, sending him a large handwritten letter showing that the U.S. interest rates are much higher than many of our peers, and he would like it to be lower, maybe 300 basis points lower, even better, maybe negative. After all, if you borrow money and get paid, what's not to like about that? Now, the new attack line from the allies of the president has to do with how the Fed is handling their $2.5 billion renovation of the Eccles building, but basically their headquarters in Washington, D.C. So this is something that's not new, but was picked up by the New York Post all the way back in April, and we have people who've been commenting on this, where the Fed is spending $2.5 billion to renovate their headquarters. Apparently there's going to be a huge waterfall, private elevators, and so forth. So it seems like it's a lavish, as they would say, like a Palace of Versailles-like headquarters. And so to be clear, to fire a Fed chair, it's very difficult. You have to have cause. The Fed chair has to have done something wrong. And so what some allies like housing official Pulte is saying is that maybe Jerome Powell did not answer when asked about these renovations or paperwork or something like that, did not do it in a proper way, and so maybe that could be cause to get rid of him. Now, the president has been made very clear that he doesn't like Powell, and that's been creating an open season for all Trump allies to go and just pile in and put pressure on Jerome Powell to quit. Now, whether or not this will actually work, I probably not. I don't think so. So the tactics so far have been to have a shadow Fed chair that could be nominated as soon as November to influence policy. Maybe have Scott Bessent change the issuance structure of the Treasury debt to make it more shorter to influence interest rates. And now it's trying to find cause to get rid of Jay Powell. Now, Jay Powell, from his perspective, has been pretty resolute that he's not going to stand down. And I think from his perspective, he thinks he's doing the right thing. He thinks that monetary policy is very independent. And he's basically kind of the last guardian of the ancien regime, where so many things, so many institutional structures in the U.S. are being changed, being swept away. And Jay Powell is kind of the last man standing in that old world. Now, eventually, of course, the Trump is going to get his new Fed chair next year. But I think Powell thinks that he's doing the right thing. He's not going to stand down. So this, if anything, is probably going to make him more resolute in keeping interest rates higher. So Jay Powell is going to, these attacks I don't think are going to be effective on him. But the pressure is going to keep piling, and I think that's worth thinking about. Because the president oftentimes, he makes these big claims, and then he negotiates to something lower. That's his style. We've seen it over and over again. He's negotiating now for 300 basis points of cuts. Not going to get that, of course. But, whatever it is, I'm thinking it's going to be lower than it would have been otherwise. So that's something to think about when you think about monetary policy independence, inflation rates, the dollar currency, and so forth. All right, so that's all I prepared for today. Thanks so much for tuning in, and I'll talk to you guys next week.